Hi friends, this is an extremely important video because I am going to dissect the budget in the simplest possible language for all of you. I've divided this video into three main parts. Part number one is the direct impact budget has on your savings and investments. Part two is I'm going to speak about specific stock sectors and how budget is likely to impact specific sectors in the upcoming 1 to 2 years. And finally, third point, I will also look at budget's impact on Indian economy as a whole. Will FIIs like this budget or not? And some of the very important narratives about Indian economy. Extremely important video. Please watch this video without skipping. You are going to learn a lot. With that, let's get this video started. So the first point is the impact on income tax slabs that we have seen in the budget. Up to 12 lakh rupees of income is now exempt from any income tax. This is a very big move. Prior to budget, if you ask me that, Rahul, what are the chances that this government is likely to give us some income tax relief? I would have said, go and sleep. I don't think there is going to be any major changes. But here we are. They have actually exceeded all the expectations we had. They've given us up to 12 lakh rupees of income as tax free. This is the win of not the Indian government. This is the win of middle class. And more importantly, this is the win of social media. Social media has finally won it because content creator like me and many others have been raising about high income taxes in India and how middle class has been crushed under the income tax burden. Finally, the government has realized, and this is the power of social media. And that's why I keep telling people, when you see some issues, speak up, raise your voice, share videos and reels that you think are genuinely raising the awareness about people's issues. So I think all in all, this is a welcome move. Because of this now, what is going to be the impact on specific sectors? I will cover that in the sector part. The last point I want to make about income tax is that this relief is also for high income taxpayers. So people who are earning more than 25 lakh rupees of income, they also have got good benefits now, because earlier 30% tax used to be applied on income above 15 lakhs. In the new tax regime now, it is going to be beyond 25 lakhs is when the 30% income tax slab will have. This is an extremely important point. And also as part of this, total 1 lakh crores of direct tax revenue impact government is likely to see. Their tax collection will get reduced by 1 lakh crore. This is huge money that the government has to find from somewhere else. And maybe I'll speak about some of the capex spending and things like that in the third section of this video. Let me know in the comments what is your reaction about this particular change that the Indian government has announced. Let me now speak about the impact of budget on Indian stock market as a whole and also specific individual sectors, because you really need to understand which stocks are showing fictitious rally or a short-lived rally that is not going to last for more than 2 or 3 or 4 days. You really need to pick your bets clearly and carefully here. So point number one you will see is that after the budget, if you see overall, a lot of sectors has been in the red. Nifty 50 itself was closing at 0.11% lower value than the previous day close. The only three sectors you will see, one is the Nifty Realty, which is the real estate sector, went up by 3.38% here. As you can see, Nifty Auto went up by 1.91% and FMCG went up by almost 3.16%. Now let me break down each of these sectors and give you some view as to how the budget impact. Number one is Nifty FMCG sector. So of course, when the income tax slabs have been lowered or the income tax relief have been given to public, we all will have more money in our pockets. And what are we likely to do with our money? We are going to either save this money or we are going to spend this money. There are only two categories here. Now, when it comes to spending the money, a lot of sectors are going to see money coming into their companies earning. For example, auto, FMCG, real estate, and so on and so forth. So if I speak about now Nifty FMCG index per se, you will note that Nifty FMCG index prior to budget was down by almost 16 to 17% because the GDP growth was slowing down, consumption was slowing down, and a lot of people were actually selling the FMCG stocks. In fact, in January, I had created a video talking about 3 sectors that in my view are likely to do better in 2025. And those 3 sectors were FMCG and auto sector, and third was microcredit. Now coming back to Nifty FMCG sector, in my view right now, if you look at the valuations, they are high. They are in fact higher than the last 5 years average PE range. So the 5-year average PE of the FMCG sector is 41. Right now, They are running at almost 45 levels. So there is not a lot of room for the FMCG stocks to go up. Yes, definitely, if you see, the index has been down almost 16 to 17% prior to budget. But after budget, already it has made up quite a bit. It might go up further from a consumption theme perspective. But please remember, you cannot really continue to hold these stocks for a longer period of time. There will come a point where the valuations will take over and there might be some sell-off. But in the short term, in the next 1 to 2 or 3 months, there is likely to be good run up in the FMCG stocks. With that, let's move to number 2, which is the Nifty Auto. Auto sector is in the sweet spot right now in my view, because if you look at the chart also from a Nifty Auto perspective, it is down. Again, it is down by almost 17 to 18% because of slowing car sales that we saw in the December month. We saw the slowing sales of motorcycles as well. But now after the budget, since the consumption is likely to increase, also, government stressed upon the irrigation and the farming. Stocks that are selling tractors are likely to see some good momentum. But more importantly, if you see, Nifty Auto has been down. The valuations are not exorbitant. In my view, this is a theme where there is likely to money that will continue to flow throughout the 2025. It really depends on how the Indian consumers start to spend their money. If you in fact see the valuations of Nifty Auto, you will see that it is the PE is only 22 right now. It is running at very well below the 5-year PE range. 5-year PE range is around 79. It's running at 22. In my view, auto sector is highly undervalued right now. Consumption is likely to go up because of the relaxation in the income tax. Also, if the repo rates come down in the next 1 to 2 months, then the home loans might become cheaper. In my view, auto sector will remain in the sweet spot throughout the 2025, and there is likely to be a very, very good run up in auto sector. The third sector that I want to speak about is the real estate sector. Have a look at my screen. You will see prior to budget, real estate sector Nifty Realty Index was down by almost 25%. Now, after budget, if you see, there is immediate rally in the Nifty Realty Index. Why? Simple 2 or 3 reasons that I'll give you. Number 1 is, of course, the consumption is likely to go up. People will have more money. They can now buy their flats or homes or whatever. So therefore, that is definitely a clear tailwind for the sector. Number 2 is that the valuations, if you see, Nifty Realty Index PE ratio is 44. And if I show you the PE chart here, the pink line that you see, in the last 1 year, it has been right now at lowest because of the reduction in the Nifty Realty Index that we have seen. So from a valuation perspective, in the last 1 year, it is running at a low rate right now. And also you will see that some of the companies, for example, DLF, it produced very good Q3 results just few days back. So definitely there is likely to be growth in the real estate sector and the index is down. I think in 2025, this sector also remains a very, very good sector from a short-term perspective. Last point on real estate sector, you might have heard that the TDS threshold has been increased to 6 lakhs. Earlier it used to be 2.4 lakhs. It's gone up to 6 lakhs, meaning that now people who are earning rents, for example, up to 6 lakhs, they don't need to pay TDS, right? TDS will not be deducted. It doesn't mean that the tax liability goes away. It simply means that the automatic tax will not get collected. Of course, this is a short-term boost as well for the real estate sector. Now comes the fourth sector, railway sector. So for railway sector, people were anticipating that the capex allotment or announcement should be around 3 lakh crores, but it was very, very disappointing. It remains flat. 2.52 lakh crores of capex spending on the railway has been announced in this budget. In fact, during the entire speech, nothing was mentioned on railways. So there is a big disappointment on railways, and the likelihood is that in the next few months, they might remain under pressure. Again, next year, can they pick up? Hopefully, yes, depending on what the capex investment will be from government. When it comes to defense spending, again, defense has got 12.9% higher allocation in this budget. 6.8 lakh crores of allocation has been given to the defense ministry. This is one of the ministry that has got the highest budget allocation in 25-26 budget as well. So this is a good news for defense related stocks, but again, it depends on the specific stocks that you hold. Overall, the story remains positive on the defense in 25-26 as well. Next sector is MSME sector, which is micro, small and medium enterprises sector. Overall, the direction that I got from government's budget announcement was that there is going to be support given to them in terms of credit facilities and whatnot. So overall, positive sentiments in MSME sector. Companies or banks, small finance banks that give loan to MSME companies, for example, Jeevan Small Finance Bank, Bandhan Bank, all these. Again, I'm taking these names, these are not recommendations, but the banks, small finance banks that have sufficient exposure to MSME sector, they're likely to do better in 25-26. Again, there are also financing companies, for example, Aptus, Aavas, they're likely to see some good movements because of good positive news on the MSME sector. Then comes the jewelry stocks. So there was a news on the jewelry stock that the duty has been reduced from 25% to 20%. That is likely to take up the demand of jewelry in India more and more. So therefore jewelry stocks were trending. Again, in my view, you really need to be selective here. There are good stocks, there are bad stocks. You just can't follow every stock here. Please do some research and let me know in the comments any specific stocks you would like me to research on. In the next few videos, I might bring you dedicated video on the jewelry sector as well. Moving on to the footwear sector, government announced that they are going to boost the leather manufacturing inside India. And there were some of the stocks were rallying, but to be honest, one of the stock that nobody is speaking about is Hindustan Foods. I think I covered that in one of my videos. Hindustan Foods is also setting up shoe manufacturing plants in India. Please go and read up about that particular company as well. You will learn. Again, if time permits, I might shoot video on Hindustan Foods. Very, very good company in terms of how they are getting into the shoe manufacturing business. And this tailwind for the shoe manufacturing sector is an important one because again, consumption is likely to go up. People have more money. And if Indian government policies are conducive for this sector, these stocks are likely to remain positive. These were the key sectors that I wanted to cover in this video. Let me now move to Indian economy, the impact on Indian economy due to the budget, and also what the FIIs are likely to see in this budget that may bring them back here, right? For that, first start with the GDP growth. And the background is that in the last 7 quarters, we have been seeing that the GDP has been continuously falling. In fact, Q2 of FY25, that was the 7th lowest quarter in terms of the GDP growth. Therefore, the numbers are not looking very, very good from a GDP perspective. But more importantly, what was the main miss for me was that GDP growth was not mentioned at all in the budget. I listened to the budget for the entire 1 hour, 10 minutes, whatever the duration was, but there was no mention of the GDP growth. In my view, that was a miss. I think at least I was anticipating or expecting some sort of brief on the GDP growth rate for 25-26. Anyways, coming back to how the governments have performed in terms of the GDP growth, I was looking at some longer term data, and here is what you will need to know that prior to 2014, when the BJP government came into power, if you look at how Indian GDP was growing, it was growing at around 7 to 8%, somewhere between 7 to 8% growth rate that Congress was able to deliver. It was not the government that delivers the growth. We as a nation were actually growing at 7 to 8%. But after 2014, when the BJP came into power, you will note that in fact 2018 and 19 we started the GDP growing down rather than growing up, and therefore now it has come back to around 7 to 8%, 6% growth rate. So nothing major has been achieved from a GDP growth perspective. The only argument you can do here is that earlier the GDP base was lower, so of course you could grow at a higher rate on a lower base versus now where the base is higher, so of course the growth will slow down. Yes, I can buy that argument, but overall if you see, we are not at a very, very good place in terms of the GDP growth rate. And what can help GDP grow? Then comes the capex expenditure, where government really pushes out capital expenditure. So have a look at the data for that. So in this year now, this year's budget, government has allocated 11.2 lakh crores of capex target. In the previous year, it was 11.1 lakh crores, so almost 9% increment from the previous one. But please also understand that in the last few years, if I show you the data, for example, in FY24, the budget that was allocated was 10 lakh crores, and we ended up only spending 9.50 lakh crores, I think. And in fact, in FY25, 11.11 lakh crores was announced, but then the revised target is now 10.8 lakh crores. So we have not been able to consume the entire capex spending that has been allocated. So again, the question comes that at what speed actually Indian government will spend money on capex, infra, etc. is yet to be seen for FY26. Therefore, really can't say much about it for now. But then that news of capex spending not going up to, let's say, 11.50 or 11.70 lakh crores possibly has taken some impact on capex related stocks. Then comes my last point on fiscal deficit, which is the difference between the revenues that the government earns minus the expenditure that the government does, right? So the fiscal deficit, if you look at it, they are now projecting it to be 4.4% of the GDP. This is an extremely powerful number that FIs will look at, because if we have the fiscal prudence in our country, FIs will think that India remains a stable company, our debt is low, our fiscal deficit is coming down, we are not borrowing much money, our sovereign rating will remain constant or at a very, very good level. Therefore, this is a very, very big positive news. But again, I want you to take and have a look at the last 10 years and what has happened in the last few years. You will note that prior to FY24, even at that time, our fiscal deficit used to run at around 4.5%. Then came COVID, our fiscal deficit pumped to 9.2% because of course we had to do borrowing, right? Now it has been coming down considerably now, and it is now projected to hit 4.4%. This is an extremely important macro factor from a long-term Indian stock perspective, Indian stock market perspective. It is a very good story, because if our fiscal deficit compresses, then we are not borrowing more money. If I show you the debt to GDP ratio here, again you will look at the last 20 years of data, you will note that during the COVID, our debt to GDP ratio was almost around 90% of GDP. It has now come down to 83% in 2024, and hopefully by bringing the fiscal deficit down, our GDP debt to GDP ratio will also continue to come down, and I think the target is around bringing it to around 60%. That used to be the case pre 2014 BJP era, right? At that time, if you see here, 2014, for example, it used to be at around 66-67%. So it has gone up lately because government has been spending. They have been spending money on capital expenditure, for example, right? So of course the debt will go up. And again, this is not a bad thing, because once you do the capital expenditure, jobs get generated. Your Indian economy is should be growing at a higher rate, right? All in all, from a FI's perspective, I think the fiscal prudence is there. I like that from a long-term Indian stock story perspective, Indian stock market story perspective. It's a structural thing that we need to have in place, and which is what government is trying to do. So full marks on that particular one. But overall, if you see, we are going back to where we were prior to BJP government coming in terms of the debt to GDP ratio. Is still elevated levels, but hopefully it will come down. So all in all, if you see, if I were to summarize budget, overall, capex theme was a disappointment. But if you look at the consumption related space, be it FMCG, be it auto, be it the real estate, they remain the winners for 25-26 in my view. These are very good sectors to go and look at. Research some of the companies, you would find that. And if you don't know about specific companies, do the research on the indexes. There are indexes, there are ETFs available that you can directly go and invest in these particular themes. There are other themes, for example, railways, defense, that has been sort of a disappointment. There was nothing mentioned about that, so they might remain bearish in the next short term. And of course, when the evaluations come down at lower levels, you might want to build up for the next 3 years of growth story, because railway will continue to be a growth story. Defense will continue to be a growth story. It's only a matter of short term, 1 year period. You're not investing for trading here, but potentially you're looking at the long term investment returns, right? I hope you got a lot of learning in this particular video. I'll continue to bring more videos on my channel. If you're not yet subscriber, do subscribe it. Also, you can consider joining my YouTube member community. I speak about a lot of assets almost on a daily basis, bring you a lot of insights that makes you a very good long-term investor. With that, I hope to see you in my next video. Until then, keep rocking.